All right, welcome back. And it is Sunday, January 31st, 2021. So this is our second week in review, the week ending January 30th, 2021. So it's been kind of a crazy week. If we flip over to our account, let's take a look at our account. You can see here that our net lick, which would be the balance of our account if we sold everything in our account and held nothing, is 57.21. So we're up $57.21. And then if you come down here, you also see we've got 200 shares of NCLH. So yesterday we got assigned those shares at $24. You can see here it's $22.65 a share. So we got assigned, our put was in the money, and we'll take a look at that in a second, along with what we did with CGC and gold. So to start with, let's take a look at what we have going on for CGC this week. So here's our CGC page, and you can see we took a bunch of trades starting on the 25th. So here you can see we bought back the put we sold on the 19th at 80%, so we got it for 19 cents. And then on the 25th, you can see we sold February 31st put, and then we sold another one. So I actually made a mistake here. I only wanted to sell one, I ended up selling two. I bought one of them back right away, lost $2. So that's what happened here, that's what's going on there. So I'm just going to hide that because we don't need to see that. That was a mistake. So let's hide those. Now we can see we sold our February 5th $31 put for 85 cents. And a couple days later we bought it back for 17 cents and sold the February 5th $36.50 put at $1.08. So CGC's been going up a lot in the last week or so. We've managed to collect $250 in premium. Current stock price is $40. So if by Friday it's below $36.50, we'll get assigned the 100 shares of CGC at $36.50. But then also remember, we're collected $250, so that's another $250 off of that price. So if we got assigned at $36.50, our cost basis would actually be $34. So that's what's going on with CGC. Nothing to do this coming week other than watch what happens with this option. If we buy it back at 80% like these others, then we'll sell another put. If we get assigned on Friday, then we'll start selling calls. So our next stock is gold, or Barrick Gold. So what do we do here? Same kind of thing. So our puts expired on Friday. The 22.50 puts expired Friday. We bought two of them back at 5 cents, which was 80% of the premium collected. And we sold two $22 puts. We got 23 cents for one and 25 cents for the other one, so we've collected a total of $89 in premium, or as you see here, we've collected 45 cents a share. If we got assigned on the 5th, which is this coming Friday, we buy it for $22 minus the premium collected. So our cost basis would be about $21.50, but we won't have that until we actually get assigned. Our last stock is NCLH, and here you can see we sold two puts and on the 19th, and they were expiring yesterday for $24. We collected $113 a share, and the stock closed in the money, so it was $22.65. So we bought the stock for $24, so we're losing $1.35 per share. But our cost basis is not $24. It's going to be $24 minus 57 cents per share that we collected. So even though we are losing $1.35, our cost basis is really $23.44. So we're only down about 66 cents per share. And then because our stock got assigned on Friday, tomorrow or on Monday, we can go ahead and sell a call against our shares and collect additional premium that way, reducing our cost basis. And let's go over and take a look at where are the options trading for NCLH now, because that's what we're going to be looking at. So let's pop back over to our account. And here, let's take a look at the options that are 5 days out. So the February 5th options and February 12th options are going to be our two choices. So the calls for NCLH, the 24 calls are actually at the 30 delta, which we wanted. They're more than 1%, which is what we wanted. So we can probably collect about 50 cents for the options expiring this coming Friday, so 5 days. So that's pretty good. And we can sell it at 24, which is what we purchased the shares at. So we won't have a capital gain on the shares, but we will have that additional premium that we collect. The other option is the 12th. And if we take a look at the 12th, well, you can look at this and see that the 24 strike is actually the 40 delta, which is closer to the money than we normally would go. But we go down here to the 32 delta is at the 25 strike. So we could sell that for about, I think the mid, what's the mid on this? The mid is about 75 cents. So you could sell it for 75 cents and get $1 in premium. So that's probably what we're going to do on Monday. But when I do that video on Monday, we'll take a look at both strikes and come up with our plan going forward. So, but the February 12th expiration's looking a little better to me than the February 5th expiration. So those are the individual stocks, the activity that happened this week. Our only action item for the coming week is to sell that call on NCLH. And then if we pop back over to our trading log, you can see we collected $452. And we have lost on some of these shares, right? So the cost basis is actually higher than the current price, which is going to bring our net lick down a bit. So if the stock prices didn't go down at all, we would be closer to 8,000. But because we've lost a bit on some of these stocks, we're down to 75.57, or we're up about 0.75%, which isn't bad considering things have been going against us. So we'll keep an eye on NCLH in these, and as the stocks go the other way and they go in our favor, we'll start collecting some capital gains in addition to the premium collected, which will help our ROI a bunch. So if you like what we're doing, hit that like button, subscribe so you can get notified when I send out an updated video about one of our positions, and don't miss the weekly review. And as usual, just want to remind everybody that this content is for information and entertainment purposes only. You should be doing your own homework, and you make all your investment decisions. Happy trading.